So remember, we're back to asking ourselves, number one, we should see follow through. If we don't, then what should we see? A reversal. How will we know we're likely to get a reversal? Because we don't see number one. We don't see follow through. So now we're ready to take a look at the 29th. And you can see, I don't know how many minutes that was, but that's, about how long it can take to get ready for a trade. So if we're pretending like we can't see, I'll just cut this off from right about here. Okay, so if we're looking at a trade in this area here, whoops. Oh, I was trying to spread it out. There we go. And we see that the market is coming up here to a resistance level. The 3-bar reversal trade is going to start really as soon as the market gets into my resistance area or my resistance zone. So over here is where I can start my count. So if I'm counting here, okay, there's 1 bar. Let me go to an arrow. Let me go to a small arrow. So if I'm starting here, I count back 1, 2, 3. This bar closes. 1, 2, 3. This bar closes. Whoops. This bar closes. 1, 2, pardon me. 1, 2, 3. Now this bar closes. 1, 2, 3. This bar here closes. 1, 2, 3. This bar here, 1, 2, 3, etc. So you can see now the process starts. And I've got my breakout point, which is now right here on this low. The market sucks up even more. Let me just fast forward a little bit. This bar closes, 1, 2, 3. My breakout point is just right there. Very close now. The market trades through, starts going down. Would have put you into initial profit. There was a retracement here. Put you into initial profit before it started moving back up. Okay? Now I've got to tell you, this move here, that's just one of those things where the market moved. Okay, there's little that you can do to predict that, but you can react to it. How can you react to it? Well, one method of monitoring is by going down to the 15-minute bar. Okay, so the first trade would have triggered somewhere in this area here. It gets triggered, you see the market coming down, and now what do you see? You see that the market is pushing up. Again, I'm looking at this average here. This is a 150% average of the trailing volume. You see that the market is starting to push volume in. The bars are getting bigger, indicating that momentum is starting to push to the upside. Okay? Now, again, we have no idea when the market looks like this. And this is just from experience, folks. When the market looks like this and you see these bars pulling across, what the trader usually will think is, holy crap, this thing is going to the moon. That's where, again, we've got to take a step back and actually look at the bars. Okay, what is happening to the bars? And I realize something here, folks, and this is very important. This is where practice comes in. This is why I am a strong advocate of demo trading, because you've got to train yourself just like the commercial airline pilot. Remember, you will react to the market as you're trained to react. So if you train yourself in the beginning to react emotionally, to react instinctively, then that is going to stay with you.